move. Because if you check now, from where are my drawings here? If you check from that day where it created a double bottom here, a double or triple bottom, whatever. From that day, that was actually a reversal pattern. If you remember that we spoke of reversal patterns, when a market has been downtrending, for example, this was a downtrend that was happening. We were downtrending, came. It was still a downtrend. So for the market to now move to the other side, it has to first create reversal patterns, either in form of a double bottom, it's not a double bottom, triple bottom. It's not a triple bottom, head and shoulder, inverted head and shoulder, actually. If it's not that, so somehow it has to create something, just something. There have to be something to show us that we are now reversing to go to the opposite direction, right? So, which is actually what we got here. This was a reversal pattern, which we started buying. We got some buys from here to somewhere around that area. We got some buys. Then this was simply a retracement. And that retracement, we actually spoke about the retracement, that it's most likely, I don't know what's wrong with my fibs. They're not showing some of the numbers, but I think I know which level is which level. So this was the retracement, and it came to 38.2. This is 38.2. This is 50. This is 61.8. So it came to 38.2% fib, and we spoke about 38.2%, whereby 38.2 said 38.2. It also actually shows that the trend now is stronger to that direction that it's particularly going. So the trend here is actually strong to the what? To the upside. So if you check even here, this major downtrend has been broken here, retested. So basically yesterday, it was simply buys. Even today, it's still a continuation of buys. So now we are in an uptrend. We always want to make sure that we get all the buying opportunities. We want to make sure that we get all of them, all the buying opportunities. So I can even remove this. I don't need this. So here we are. First touch something like this. So we have something like this. That's the channel that we have to the upside. You can even draw another trend line at the top. It's also fine. But currently, this is the channel that we are following. So right now, we are still bullish for the VIX. We are still bullish up until here. The market can even push all the way to this resistance here, because it's forming high highs. So the next high, it has to break these recent highs. So even if it goes to that resistance, it's still a high, because it would have broken these highs here, the previous highs here. So if it goes to that resistance, it's still a high. We are still continuing with that uptrend. So right now we are still looking at a bullish movement for the VIX. Once it gets this resistance, we now want to see now how price is going to move. If it breaks that resistance, it's simply now a zone-to-zone thing. It's simply now a zone-to-zone trading thing. Once it breaks this resistance, we're looking forward to this next level. Once you see it breaking, you're simply looking forward to the next level. So once there are areas in the market whereby you now look for zone-to-zone areas as your level of targets, as your targets. There are moments like that. For example, this current moment, if it breaks here, we're looking to this next major zone. Breaks there, we're looking to this major area here. So that is also another way that you can also look at the market, and also look at VIX75. So currently bullish, we're currently bullish. You can even add the 50 exponential moving average. This one is a very good, a very, very good moving average. 50 exponential moving average. Very good for entries, very good to even show you the direction where we are going. So if you check here, it's below. When it's below like this, it's showing you that it's acting as a support, as a dynamic support. So it's pushing price higher. So it's there to act as a support there. So everything right now so far is pointing to the upside. Everything is pointing to the upside. Market structure is bullish. We have an upward channel already that has been created. We also have the 50 exponential moving average that is supporting what we are saying. We also broke out of a major downtrend channel, which was this trend line here. This was the major downward channel. So above my trend line is my major buying zone. Major buying zone like that. So above my trend line, I'm mainly concerned about buys. Buys are my major concern above the trend line. So above the trend line, my major buying zone. Right. Below the trend line, major selling zone. So that is it. Right now, we are in my major buying zone level. But you don't just enter anyway. You don't just buy because we said we're in a major buying zone. There are areas that are meant for entries. There are always areas that are meant for entries. So that is where now you can now go back to lower time frames, your 4 hour, to your 1 hour, just to identify entry point areas. Just to identify entry point areas. So here on the 4 hour, we're on the 4 hour here. So honestly speaking, I can say people sometimes we overcomplicate the whole concept of trading. I don't know why you overcomplicate it. It's not easy, but it's simple. It can actually be simplified. It's not easy, but it's simple. It's like the majority of the concepts that we were taught, or that we were taught in school, whatever. Most of them, they are simple, but they are not easy in terms of understanding what is being said. They can come to you and say ABC, but it might sound simple. It might sound easy, but it's not easy. It's simple, but it's not easy. It's simple, but it's not easy. So here, we are simply in an upward market. In an upward market, I'm concerned about buys. I'm simply concerned about buys. Here, if you check on a lower time frame, this was simply a good opportunity for some buy entries. This breakout here. So it was simply a retracement, basically. You could have ended it based on that breakout or based on the fib retracement there. So 4 hour, here we are pushing to the upside. Nothing much to add there. Everything is in confluence. So if you check, the moving average on the daily is still below the market. On the 4 hour, still below the market. That is where the confluence comes in. They are both confluencing and saying the same thing. That is what we always want. We always want to take trades that are on time frames. For example, when you see time frames saying the same thing, once you see the lower time frames confirming what is on the higher time frame, those are high probability setups. Those are high probability trades that you are supposed to be taking when you find your lower time frames confluencing with what you are seeing on the higher time frame. Those are the trades that you need to take. You understand?
Yes.
Yes. So You don't just need to take any trades, you simply need to take the high probability ones. For example, high probability trades when we're in an uptrend are always going to be more on the buying side. When we're in an uptrend like the one that we are in now, high probability trades are always going to be on the on the buying side, because when you're in an uptrend, impulse moves are going to be more on the buying side than on the selling side. So you always want to be more on the side where the market is currently preferring. It's called the path of least resistance. So the path of least resistance when we're in an uptrend is always the buying side. You always want to be found on the path of least resistance. Path of least resistance in trading, those are moments in the market whereby you can even enter a trade and you realize that it faces little or no drawdown at all. Why? Because you are trading on the path of least resistance. The market can easily flow to that direction that you are trading at. For example, here in an uptrend, the market can easily flow on the buying side than the selling side. You find out that if you try to take sales in an uptrend, the market, it can, depending on your entry point now, it can sell, but the way it will be selling, you actually see that this market is struggling to sell. It's really struggling to sell. So this is the trend line on 1 hour that you could have also used for some entries. Break, retest, went, retested again. So this one could have also given you some buy entries there. We'd have gotten some buy entries based on that. And also this trend line here. So here we are on the 1 hour. Here we are on the 1 hour time frame. On the 1 hour time frame, we can also see that we have a level of resistance. That level of resistance is also a key area. Once it's broken, we actually can now enter further buys. Further buys there. First target according to the 1 hour, it would be this area here. This area here. So that is what we are currently waiting for now. We simply wait for the markets to break this resistance, because that resistance is a key resistance. But overall, market structure is bullish. That is why we want to take the buying opportunities more than the selling opportunities. So here we are. Once we break there, we simply enter our buys. We simply enter our buys. First target is that area there. Right. So that will be, you're simply risking almost $8, or even you can even risk $10. That's a risk of $10 to make 50. That is 1:5, which is a good risk compared to reward. Which is a risk compared to reward. If you ask me, that is a good risk to reward ratio. Risk to reward ratio 1:5. I don't normally take trades that are 1:1. I don't take 1:2. I don't take 1:3. That's where you start taking 1:3. That's where you start taking on trades. That's where we start taking on trades. 1:3 risk compared to reward. So here we are simply waiting for this buying opportunity. All the confluence market structure is in our favor. The higher time frame is confirming the bullish movement. Lower time frames, they're also now confirming the same thing. So when everything is saying the same thing, like those are trades that you simply need to trade, because they are high probability trades. So right now, we simply wait for that break. Once that break happens, we simply enter our buys and look forward to that next level there. So you can even go. So my entry time frames, they can vary. Entry time frames, they can vary. For example, we start from the 15-minute. 15-minute is good. 30-minute is good. 1 hour is also good, because it gives even small stop losses. Small stop losses. So 15, you can enter, 30, you can enter, 1 hour, you can even enter. 5 minutes and 1 minute, they carry too much noise, especially for the VIX. That is where you see a lot of fake outs happening, that's where people say, this thing is full of manipulation, yet you simply don't have an understanding to know that this thing, it's not really manipulation, it's you who doesn't know how it operates on different time frames. Lower time frames, they always have a lot of noise, honestly. They always carry too much noise, too much noise. They can actually tell you that we are now in a downtrend. Then the next minute you find that they now change and say, we are now in an uptrend. So they shift things quickly in a short space of time. Unlike the higher time frames. Higher time frames, they maintain the same bias for a long time since they are higher time frames. For example, the daily can maintain a bullish bias for days, for weeks, for even the whole month, still maintaining the same bias. Unlike the 1 minute, 5 minutes, you discover that the next minute it's saying we are bullish, next minute it's saying we are bearish. So it's a whole lot of noise. That is why scalping is one of the most stressful methods of trading. Scalping is one of the most stressful ways of trading. Very, very stressful. Because you're in, you're out, you're in, you're out, you're in. It's just stressful. It's just stressful. It needs people with strong emotions and strong mindsets that are able to endure the stress of scalping. So basically, VIX, that is what we're currently looking at. The market structure and everything, we are bullish, but we simply now wait for the entry points. For example, the next entry point we said is after the break of this resistance, because this has been a key resistance. Once that one is broken, we can enter. Our target is that area there. Then once it gets there, we look forward. We go back to the higher time frame and check what is happening, how further can still push to that particular direction. But basically now we are bullish, we are bullish, we are bullish, we are bullish. So do you have any questions? Any questions on the VIX?
Nope. None.
Okay. So yeah, that's it for the VIX. I think I also got a chance to look at Crash 500 over the weekend. I was just looking at it. Crash 500, it seemed like it's more, when it comes to the issue of stability and the issue of it seems like it's more stable compared to these new ones that are just coming in. I don't know, is it because it has been traded for quite a long time or what, but it seems like it's more stable.
Yeah, it's not funny. It doesn't act funny that much, except for the fact that it's always falling, but it doesn't act.
Yeah. So Crash 500 overall, it's still pushing down. I don't know why. Is it still going to continue pushing down or what? This thing overall, it has been falling. Such things that have been falling for a long time, they are very dangerous instruments in terms of you just thinking, maybe now it's done. You don't know, is it really done? Are you sure that it's really done? You actually need solid confirmations on the higher time frames to make sure that it's really now pushing to the upside. So here we have a resistance that price almost approaching. Once it gets to that resistance, we need to see what is going to happen. We need to see what is going to happen. Because here, this whole move can just be a retracement from this impulse move that happened. impulse, retracement, then a possible continuation according to simple basic market structure, price action, I mean. So if you check, let me put the fib point A to point B. So around that resistance is the 61.8 Fibonacci. So that is why I'm saying somewhere there we can expect a drop somewhere around that the resistance where it's approaching now. We can expect a drop. So either it's going to drop, come here. If it breaks there, we look forward to the 0%. From the 0 now, we now need to see how price is going to react. Is it going to respect and go up or what? So 0, once it breaks 0, we look to the next negative 27. That is how we look at targets according to the fib. So that is simply roughly one of the things that I've been looking at for C crash 500. But I looked at it with all these strategies. Even smart money concept, I even applied it on the